Oh man, I say it every day, guys. I say it every day. That music, though, boy, does that just get to me and get me going and top of my list. So I was just whistling along. Sorry about that. Got caught up in that. Happy Wednesday, everybody. Happy Wednesday. Very quiet in the markets. Very slow. Very light volumes. Um, Today was supposed to be the day, the July 9th tariff day. But here we are. And just a couple days ago, as we know, that got extended to August 1st, though there are a lot of announcements that President Trump has been making. The latest one that I just saw was with, didn't even know we had any trade with them. It was with, boy, I can't even. I'm trying to look. That's why it's so inconsequential. I can't even think of the country that I saw that they just made a deal with, but it was certainly not China, not the EU. I'm looking up. Let's see. It was with Libya. Oh, great. Okay, thanks. Libya, Iraq, Algeria, Moldova, Brunei, and the Philippines. Okay. Philippines charged the lowest tariff rate of 20%. Brunei and Moldova each hit with 25%. Algeria, Iraq, and Libya, 30%. Okay, well, I'm going to go into in the presentation here, and we're going to show what countries we have a trade surplus or trade deficit with. But what I really wanted to do today, kind of just like yesterday when we went through the big, beautiful bill, things, pros, cons. Again, I'm just presenting information to everybody today. It is not political. It is not any sort of bias. Okay. So before we get going here, if everybody could smash the like, would appreciate it. George, really appreciate that comment there. Really appreciate that. Thank you. Thank you. Very nice of you. All right. So today is all about tariffs. What are tariffs? Why is President Trump so gung-ho about tariffs? What do they really mean to you, to me, to the government, to the economy, right? Can everybody hear me okay? George, thank you. That's awesome. Hey, Steve. All right, excellent. Excellent. All right, let's get going here, guys. Let's get going here. Again, same. I used this yesterday. I typically don't use the same slides and repeatedly, but I used this yesterday. Okay, this is not a political discussion whatsoever. This is a fact-finding mission. All right. Okay. So what are tariffs? Okay. What are tariffs? Okay. Well, they're taxes that governments impose on goods and services which are imported from another country. They're there to raise revenue. They're there to protect consumers and domestic industries. They're there to safeguard us from unfair trade policies or practices. They are just like a sales tax, bottom line, and they are paid by the importing business to the customs authority. And then it's, really, okay, that business is paying this extra tax. What are they going to do with it? Are they passing it on to us? Are they eating it, et cetera, et cetera? Okay, yep, Kevin, there's no question about that. One of the goals of this is to move production to the U.S. There is no question about that. And David, you are welcome. So the way that the current tariff situation is structured, okay, is when something is imported, individual companies directly pay those import taxes to the government within 10 days. Then they have to decide what they're going to do with that. Are they going to pass that on to the consumer? Are they going to eat the tariffs themselves? Okay. And one of the things that this does do is lower competition on domestic sellers. Okay. It tries to get rid of, as we just said, unfair trade practices. But when you take a deep dive into this, most economists do agree that tariffs have a negative economic impact. Okay, but lowering them can expand economic growth. So we're going to go through an example here of how tariffs work. Okay, here is just a graphic of adding on a 20% tariff of $2 between country A and country B. But let's go through an actual kind of walkthrough example here. Okay, so let's say Walmart imports a $50 shoe, and I probably shouldn't have used 50. I'm not sure Walmart has. I'm not sure that Walmart has a $50 shoe, but let's say they do import a $50 shoe from Myanmar. Okay, which is now at a 40% tariff. Okay, well, Walmart owes $20 per pair of shoes to the government. Okay, so what happens next? Well, they could try and force the cost back onto the country they're importing from and back to the shoe manufacturer by just telling them that, well, we're not going to pay $50 anymore. If I'm getting charged a 40% tariff, maybe there's a negotiation that those shoes actually cost less. That's a good one, Paul. That's a good one. So they could try and negotiate that price. They could, as President Trump wanted, and he said weeks ago, Walmart could eat it. They could cut their own profit margins, absorb the cost of the tariff. They could raise the price of shoes at their stores, which really, this is what we have seen happening with various industries, various products. They could do some combination of the above. Or, as Kevin said, one of the goals here, and maybe Walmart's not going to do it, but one of the goals here is for these companies to bring production into the United States, away from other countries into the United States. Okay, so here are a list of what we know so far. Okay, this was as of 2 days ago. Okay, and I don't know that there's been anything since. I know there was the deals this morning that came out that are not on this list. Okay, Japan, 25%. South Korea, we can all read the list here. But what I want to really focus in on, okay, and something that the tariff is what they pay for. That is correct, Bear. That is correct. Something what I want to focus on, which to me, again, no politics here, guys. No politics whatsoever. Okay. From the April 2nd date that threw the world into a tailspin and our markets into a tailspin to what actually is going to be going into effect, if you compare, there's almost no difference across the board here. There's almost no difference from what was announced to what is actually going to be going into effect as of August 1st. Also, if you look at this list here, okay, with the exception of probably just Japan, maybe we can count South Korea in there, okay? And I'm not trying to be flippant. I'm not trying to be naysayer or anything like that. But honestly, who cares? We need the goods. We need a deal with China. We need a deal with the EU. We need a deal with our major trading partners, with Canada. Okay. So, I'm not so sure that any of this really means anything for now. And I think that is what the market is interpreting. Okay, let's see what happens with the big guys. Okay. Now, there is an update, nothing settled yet. These are, and I should have said Vietnam also, because that is a very big trading partner. Okay, but here's where we stand with these three big guys. Okay, what is in the works with Vietnam is just a 20% tariff as opposed to the 46% tariff that was threatened back in April. Okay, now there's also a 40% tariff on any what's called transshipping. Okay, what that means is it's coming from Vietnam to us, but they're originating somewhere else, like China. So they're going from X country out there to Vietnam, and then Vietnam to us. Okay, so that is where we stand with Vietnam. With the EU, nothing is signed. Nothing is signed. But the EU has signaled it's willing to accept a 10% tariff across the board, but they do want some exemptions. And I know that they are working, and our administration is working pretty hard with the EU to try and hammer something out this week. Okay, so that to me is one of the big ones. If there is a negotiation, if there is a deal there with the EU that is not egregious, okay, which seems like that's what the market is expecting, that could be a really good thing for our market. Okay, and with Canada, okay, I think it was last week, maybe it was 2 weeks ago. These days are kind of running together. Canada had come out and said that there's going to be a major tariff on us on a digital service tax. Okay, which would have really hurt a lot of our big tech companies. Okay, and Canada dropped that. They scrapped it. So they too now are in the midst of some, we think, intense negotiations with the US, and they're looking for a deal within the next week or two. Okay, so those are the ones of I guess I'll say countries or areas of substance that maybe we're close to making a deal with. Okay, Thomas, I think that the transship, as Kevin had said earlier, is really to punish China. Okay, I'm not a tariff expert, but everything I've read, that's what it's really about. Okay. Now, let's talk about some of the tariffs for different sectors that have been going out. Okay. So we just saw, just last month, a few weeks ago, tariffs on foreign steel and aluminum. Those are doubled to 50%. Okay. And the reasoning behind that is because there's a lot of concern that other countries are going to undercut the competitiveness of American industries. Meaning, if we're going to sell something here for, $10 per widget, another country may sell it for $5 per widget just to take the business away. So that's why there's a major tariff on foreign steel and aluminum. Okay, but the bottom line is that probably just raises the costs for American businesses. automakers, plane manufacturers, home builders. Bottom line is they're going to pass that on to me, to you, to everybody we know. Okay? Car and car parts. All autos assembled outside of the United States. I think we actually touched on this yesterday. But all cars assembled outside of the United States and all imported auto parts, 25% tariff. Okay, this next one, kind of a legal name to it, de minimis. De minimis, what the heck is de minimis? Okay, there used to be a loophole, I guess a tariff loophole, okay, that allowed retailers to send goods, clothing, whatever it might be, from China directly to America without paying any tariffs. Okay, and that rule allowed products up to $800 to avoid these taxes, as long as they were shipped directly to me, to you, or to small businesses. Okay, so what that did is, it resulted in Shopify being so unbelievably popular. Shine and Temu. Okay, we know it's, Temu I only knew about because my kids were using it a ton. Okay, but as long as they were shipped directly to them, there was no tariff, there were no taxes on it, and it made it really difficult for U.S. manufacturers to compete with the surge of these low-cost Chinese products. How many of you have ordered something off of Temu in the last couple of months? Were those, I don't know what the quality of that stuff is, but the prices are like 10% of what our prices are. So that loophole, gone. Any of you ever used Temu? Yeah, Dave, there's no question. As a home builder in your area, tariffs made a big difference in extra costs for you. Yeah. Danny, I figured you've used Temu. And the prices are ridiculous. Again, I don't know what the quality of those products were, but prices were just absolutely ridiculous. And they could be that cheap because they didn't have to pay that excess tariff. Okay, so what happens here? What happens? Well, like every other product in the world, like how anything is priced, including options, right? Prices are set on supply and demand. End of the story. Supply and demand. Okay, now let's talk about copper, since that is in the news as of yesterday, especially. And we'll talk about supply and demand with copper. Yeah, Steve, I've never ordered from there, so I don't know how long it takes to get something from Temu. I really don't. But excuse me, yesterday it was announced that there is going to be a 50% tariff on imported copper. Okay, why? Well, the bottom line is we want copper. We want to be able to use our own copper here. Okay, we want to spark this revival of the U.S. copper industry. Okay, and discourage people from buying copper overseas. So what happened when that was announced? We saw the price of copper just shoot up to all-time highs. Why? Supply and demand. All of a sudden, like that, literally yesterday, okay, all of these companies that sell copper were trying to get in as much as they could before these tariffs take hold. So talk about supply and demand. The demand all of a sudden just shot up incredibly. So copper futures were up more than 12% yesterday to an all-time high. Okay, and what these companies were doing was try to cash in on the premium ahead of that deadline. Okay, the problem with this is you would think in a perfect world, David, yes, that you would think that would depress the value of copper miners outside the US. However, the reality is it will take years and years and maybe decades for these companies to gear up their production here in the US. So it's not just like, okay, we're trying to flip a switch and all of a sudden the US miners, okay, are going to be able to pump this all out. Okay, so around the world, I was reading this last night, around the world, traders, companies, they're getting as much copper out of warehouses that they can and shipping it to the US now. Okay, but it's a very, very tight deadline because what people are saying, when I say people, I don't know if that's coming from the administration, businesses. I mean, I have analysts and traders in here. But what they're saying is only those cargo ships that are already on the water or coming from Latin America, not all the way across the world in China or anywhere in Asia, but any of those, only those are likely to make the timeline. Got to be here in our ports by August 1st, or that 50% is going to be added on. Okay, let's get Thor out here today before we move on here. Okay, if everybody gets tariff in there, please. And when we get back to the rooms here, the market is close to, not quite the high of the day, but close to the high of the day. PHM is soaring, which we have a position on, and we talked about earlier in the day about maybe adjusting that position. We're going to look right into that as soon as we finish with Market Minds here. Bear, that's a really good one. Oh man, you guys are always, let's put in here what Bear said. I like that, Bear. I should have done that. Although I'm not sure that Thor just gives a nice, quiet little rough. My guess is he's growling a little bit heavier than that. But that's a great one. All right, let's get back here and we'll put up Thor one more time. So I mentioned earlier I was going to show you where we have our deficits and surpluses with countries around the world. Okay, and this is up through 2024, so it is the most recent data that is collected here. And here you can see that we do have a very lopsided trade situation, primarily with China, the EU, and Mexico. Okay, and the goal of all this really is to get more U.S. production. More U.S. production. Okay, but I think what a lot of people don't realize, great, in theory, that is a great thing. Sure, let's bring everything onshore, right? But we don't have, I would say, when I say we, I'm talking about the US, I don't think we have the capacity or the infrastructure in place to really build what is necessary to create these products here. And again, just like I was, in when we were talking about copper a minute or two ago, this is something, albeit nothing, good things don't happen overnight, but this is something that will take years and years and years to build up. Okay. So on this entire here, if we compare that to the list of deals that were already made, the only two of note are these guys right here. So personally, I think that the market has got to get some big winners in the trade deal here with China, Mexico, EU, Canada, whoever it is. We have got to get some of these major countries. We have to get a deal with them. Otherwise, I think people are going to kind of start saying, this is getting a little long in the tooth here. We're really no different than we were back in April. Where are we going from here? David, there's no question about that. And Kevin, you're absolutely right with that, which isn't necessarily a bad thing. So what Kevin said, because of the dollar, because the dollar is the world's reserve currency, you typically are going to always have a trade deficit. And that's fine. That's actually fine. Economically, that's fine. I do agree with you, David. On a personal note, I think it's going to be very, very difficult for these companies to be able to produce whatever products here. You're right, because of the labor. Bottom line, the labor issue is something we've been dealing with for how many decades, and that's not changing. That is not changing. All right, everybody. So again, today, just like yesterday, I just want to present the news that is important to each of our pocketbooks, to the markets, just kind of cut through the crap that's out there, because again, just like with the big beautiful bill, you can look at any news source and you're going to get 17 different interpretations. Same with tariffs here. So I just want to present the facts that are out there. All right. That is what we have for today. Any questions by anyone before we go to the wheel? The wheel is closed. Sure, you want these slides, Richard, like we did yesterday? Sure. Let me get a link to that. Let me just upload this real quick here. Tomorrow, guys, I will be on the floor tomorrow in the S&P 500 pit. Boy, if I aged as gracefully as Vanna White, George, only if, right? Only if. All right, I think I got the link. Almost, not quite yet. It's coming up. Oh, just got it. No, I didn't. I thought I did. But we can get to the wheel here while we are waiting. Oh yeah, This is great. The wheel is just like yesterday. This is, oh, there's the link. Excellent. Thank you, Danny. Thank you. Thank you. I'm posting it up right here, guys. There is the link to the presentation today. All right. Yesterday's winner. Yesterday's winner was Rocky Mountain Chainsaw. So you will not be allowed to win today. In fact, I don't see you on there, which is really great. Let's get rolling here. Tom again? Man, Tom, you won last week. I think we're gonna have Tom. We'll get you something, but I'm gonna spin this again because Tom, I know you just won last week. Let's roll this again here. William or Aladdin? William. All right. So William, are you here? Tom, are you here? Tom, I said I'd still get you something. Just want to get another winner in today. So shoot me an email, please. We do need the Prosper cowbells. I got to look into that. Yeah, right, Bear? All of a sudden, Tom is just like Robert. Win after win after win after win. Yeah, Aladdin, you were very close. William, are you here? If William is not here, oh, there we go. Okay, got it. Beautiful, beautiful. All right. Thank you, everybody. Again, calm day in the markets. S&Ps now are up about 20 points. If you're in the op vol room, come on right back because we are going to look into doing something in PHM right now. Okay, and in op essentials, I know we just filled in our CMG signal. All right, everybody. Again, I will be live on the floor tomorrow. I will see you from the CBOE.